Okay, now we'll start the call now. So welcome to the Cross-Border Trade and Investment Advisory AfCFTA Business Series session webinar 5. So today we'll be discussing on digital trade and intellectual property. Before we get to it, we'll run through who is Great Circle and why we came up with this program. So Great Circle is a cross-border trade and investment advisory firm that structures transformative projects for institutional financing in Africa. We structure bankable mandates across the energy, infrastructure, technology, and agro-industrial sectors, connecting aligned investors with Africa's most compelling opportunities through rigorous transaction advisory. Our mission is simple: to structure investable projects, capital, and provide strategic advisory that ensures projects deliver lasting economic, social, and environmental impact beyond the investment horizon. So about the series, the AfCFTA Business Series came about from a need to improve access to information on the implementation of the AfCFTA for stakeholders it was established to benefit. So we saw a gap in, some of the clients have, and those that were seeking to advise as well, who don't understand what benefits they get to enjoy once they understand how the AfCFTA runs and what's in it for them once they onboard it into their systems early. So we provide, we deeply believe that for common markets to exist, it will be driven by businesses that understand how trade works beyond the regs. So for EAC, COMESA, SADC, UMA, SENSAD, ECAS, IGAD, and ECOWAS. How this program is structured into thematic pillars that reflect how businesses actually experience the AfCFTA in practice. That's market access, covering trading goods, digital trade, trading services, with emphasis on tariffs, preferences, execution, and emerging services opportunities. Then we have business environment protocols, which include competitive landscape, and shaping cross-border business activities, including investment protection, intellectual property rights, and ESG. Last week, we had a session on ESG that was run by Nelly, so fell under business environment protocols. Then governance and risk protocols, which address dispute settlement, enforcement, trade remedies, and regulatory risk, which are often overlooked but critical to sustain border operations. Then lastly, contracts, financing, and scale. The capstone session translates AfCFTA access into commercial outcomes, focusing on contracting, financing, bankability, and readiness. So the objective of the program is, unlike traditional trade trainings, the series is deliberately structured to move participants from awareness to application to strategic advantage. It's targeted at business leaders, SMEs, investors, advisors, and institutions seeking to operate competitively within Africa's evolving market. It's anchored on AfCFTA own legal and institutional architecture, and delivered over 8 carefully sequenced webinars. We're currently in the 5th one, and each phase built onto the previous one, ensuring participants develop not only technical understanding, but also commercial judgment, risk awareness, and strategic foresight. So we'll get right into today's session, which is AfCFTA Protocol on Digital Trade and Intellectual Property. I think that the first question would be what we understand by the term digital trades. So probably pass the mic around, what's the first thing you understand when you hear digital trades, right? Because some people think of it to be trade in services. Some think of it to be trade in goods that use digital infrastructure. But what's the first thing you think about when you hear protocol on digital trade? You can feel free to use the chat box or unmute yourself. Okay, so digital trade is any business activity where value crosses borders through digital means. That means selling products online across countries, which includes online sales, B2C and B2B, both at uh, a individual level, those trading retail and those trading wholesale as well, business to business. It also includes providing services remotely. So for people offering services from one country to another in different sectors, maybe consulting, legal, tech, it also falls under what is understood to be digital trade under the AfCFTA. Also, digital payments and fintech transactions. Actually, a few days ago, I was speaking to somebody, and the main question was, why does fintech fall under the AfCFTA? And the simple answer is fintech is the backbone of digital trade in Africa. And we've seen that there's been, a lot of projections on what digitization of trade could essentially do for the African market. And, as we speak about inclusion for women in the trade industry and in also, services, provision of digital services, how then does it fall under fintech? So that also is included under the AfCFTA protocol, and we get to see this as well as softwares, apps, and digital products formulated in Africa, content, branding, and online platforms, because not even the content creators are left behind when it comes to the AfCFTA and what they're trying to cover within the continent. So why regulate digital trade from a continental level? Unfortunately, different countries have different rules when it comes to data protection, when it comes to fintech regulation, when it comes to consumer protection. Many countries, depending on who colonized them, adopted a system of their colonizer. So, for example, British, right? Countries like Kenya, Tanzania, our system is very UK aligned, UK system aligned, and you'll find most of our laws are borrowed from India, but under, the UK systems, what they used to do. Same thing applies to countries that were ruled by Dutch, South Africa. We get to see they have an understanding of, or rather a different interpretation when it comes to key provisions of data protection, consumer protection, and, fintech approvals and regulations within their systems. Now, when we talk about fragmented rules, what does it essentially encompass? It means there's different data protection laws, incompatible payment systems, platforms and consumer protection gaps, weak cross-border and intellectual property protection, and uncertainty on where trade legally happens. Now, we'll get to the protocol on digital trade. Now, under the main umbrella agreement on the AfCFTA, there's been different protocols that guide how trade actually happens within Africa. Remember, we're trying to move away from REX, trading under REX, and ensuring that more countries ratify the different protocols so that AfCFTA essentially becomes the only economic body that regulates trade and investment within Africa. So how does that happen? Because we're trying to sort of like cut the spaghetti ball effect of REX and people understanding if I'm a member of SADC and I'm a member of COMESA, there's two different laws, speaking to the same thing, but they're asking me to do different things. So how then do I, as a trader, do I ensure that I'm compliant with this? And that's why we have these protocols to come and say, listen, let's move away from the different REX agreements and focus on one particular regulation that helps traders stay compliant and reduce their compliance costs, which is often the biggest cost for traders and businesses seeking to improve market access and trade in different countries across the continent. So the protocol is essentially a strategic blueprint designed to create a unified, secure, and inclusive digital marketplace for Africa's 1.3 billion people. It's built on two main pillars, the protocol itself and its detailed annexes. Now, we'll get to the annexes and what they essentially do, but the protocol was adopted in February 2024 at the 37th AU Summit, and establishes the high-level principles and binding obligations for all states. Now, the AfCFTA agreement is supposed to be a binding document that ensures different countries that actually ratify it are held to their word when it comes to its implementation. For example, the Protocol on Digital Trade, since its adoption in 2024 February, each country was given 5 years to essentially submit, their understanding of schedules that they want to be implemented within their borders. And we'll quickly get into how this looks like. The protocol uh, is divided into parts, which covers different provisions. As I said, the reason why the protocol was established in the first place is to look at fragmented roles within Africa and in different African countries. So the provisions include cross-border data transfers, protection of personal data, data localization, inclusion, and dispute settlement. Now, for different countries, there's different standards of how different companies can use data, right? So when you collect data of your clients, of your customers, how can you use it? And are you allowed to transfer it from one company? For example, if your holding company is in Mauritius and your subsidiary is in Kenya, are you allowed then to use the same data in Mauritius? Now, such details are what is addressed under the provisions of the agreement. Now, it's further looked at into annexes because each annex is further negotiated by different African countries to have a single understanding of, how should these rules essentially apply to ensure that there's access. Key developments. Before we get to the annexes and how they look like, remember after it was adopted in 2025, countries were given 5 years, right, to essentially get on the bandwagon and implement the protocol in their countries. Now, beyond the main protocol, as I've said, it's divided into two, the protocol and the annexes. In February of 2025, the African leaders adopted the 8 annexes that provide the detailed and operational framework for the protocol on digital trade. Now, as of today, 50 of 55 African Union members have ratified the umbrella agreement. This means that each of these 50 countries needs to submit, their understanding of how the schedules should look like when it comes to implementation in their specific countries. In October last year, we held in Nairobi a 10th meeting of the Committee on Digital Trade. Now here, member states discussed cross-border payments, data transfers, a digital public infrastructure, and national digital identity systems. When we talk about digital infrastructure, we refer to digital infrastructures like Glovo, like Amazon, so on and so forth. Now, they were discussing how to have a single public infrastructure within Africa that allows different people, especially now that we're talking more about inclusion of women and people with disabilities, to get onto the platform and have more access to have better access to more markets within the African system. As well, in October last year in Nairobi, the draft terms of reference were adopted for working groups. So
Hi, Brenda, I think you're muted.
Sorry, at what point did you lose me? I'm so sorry for that.
Sorry, I think it's been like 3 minutes.
Had
Yeah.
we started discussing the rules of origin?
Yes, yes, we had.
Okay, all right. So I'll just get back to it. So for benefit of me not confusing anyone, so the rules
Okay.
of there's different annexes under the Protocol on Digital Trade. There are 8 of them. Now, when diving into the rules of origin, one of the key issues that was there with policy advisors on the on the protocol, on the annex of rules of origin, was whether companies originally established or incorporated in countries like the US, UK, China would come into Africa and say, but this is an African country, right? Because when we talk about rules of origin in the trade space, it's very easy because rules of origin in the trade space is about what's the percentage of improvement on a good. Now that becomes very easy because it's easy to identify once you look at and see, is this good actually originating from Africa? Now, when it comes to digital trade, it's a more complicated conversation because it shifts from just what is an African service to who owns this company that's providing this African service, right? Because we're trying to improve access to other markets by African companies. Now, that question, as I say, why this rules of origin annex was very complicated, or rather is very, very complicated to essentially come to a consensus on, is the issue on the risk of companies bypassing the beneficial ownership test, right? So what essentially the annex defines is a criteria to determine which digital products qualify for preferential trade treatment within the AfCFTA. We'll definitely keep an eye look to see what is happening and whether there's an understanding or rather consensus on how this annex should look like. Now, the second annex is digital identities, which sets a common standard for implementing and mutually recognizing digital identity systems across borders. So different companies have different digital identities in Kenya, in Namibia, in South Africa, so on and so forth. Then cross-border digital payments, which enable seamless digital payments by developing cross-border authentication and payment infrastructure. We already have the PAP system. I will talk about it more in a more defined manner as we proceed because I wanted to put that separate to show you how it's working and how the implementation has been so far. Then also cross-border data, which establishes rules for how data can be transferred and used, including data protection regulations. As we say, each country has different data rules. How do we then combine them to make sure that companies' compliance cost is cut down as much as possible and they're still able to trade and it's not an impediment essentially to their operations. Now, the other four annexes include legitimate reasons for requesting source code, which defines limited circumstances, for example, regulatory audits where governments can access software source code. Why this was a very important annex is because as we're trying to improve access and digital trade within Africa, there needed to be a response to what is cybersecurity, what's their understanding of cybersecurity in these different countries, right? And how could we then tackle it from a continental perspective? And that's why this annex is very important. It does tackle that. So for those in the cybersecurity space, I think there's an annex to look at and see how the implementation goes. Then there's also online safety and security, creates a framework for cybercrime prevention, online consumer protection, and cybersecurity awareness. Now, the annex on legitimate reasons for requesting source code works hand in hand with the annex on online safety and security because each country has its own DCI or investigative crime unit. When they're doing the investigation and doing audits to make sure, or even for tax purposes, making sure that a company is actually filing as it's supposed to be and not using data in the wrong way, or conducting cybercrime within Africa through these digital platforms that are given, then these are two key annexes that are used. Then the last two annexes is emerging and advanced technologies, which governs the ethical, safe, and responsible use for technologies like AI and blockchain. And lastly, financial technology, which establishes a framework for developing and regulating fintech solutions across the continent. As I said at the beginning, one key challenge that has been seen while trying to put the protocol together is seeing how then do we make sure, since the fragmented rules of how do we regulate a fintech in one country, and how is the fintech still regulated in country B, and bringing that together to ensure that it's not a higher cost of compliance for fintech companies established in one country looking to find clientele in the second country. Now, the key enablers being operationalized under the protocol on digital trade include interoperable digital payment system. We'll talk about PAP shortly. Cross-border data flows with trust and security, harmonized digital identity systems, and robust data protection and cybersecurity framework. So as the annexes got adopted last year, there's been a lot of work looking to see how this annexes could be operationalized on the ground and in a practicable manner for countries. So we're actually seeing real momentum. Countries are building the systems that need to make digital trade work. As I said, the biggest question at the beginning was, what is digital trade? Because there's a protocol on digital there's a protocol on trade in goods, which essentially talks of when goods are moving from one country to another, what rules should apply, and what's the tariff, what tariff, how should the tariff look like. And there's also a second protocol on trade in services, which also talks about that. Now, bringing these two together and understanding, so long as you're trading on a digital platform or a digital infrastructure, then it falls under this protocol and it actually guides it. A country that has actually been very active in frontlining itself and making sure that it sets itself as, a key haven when it comes to digital trade is Mauritius. We did see them end of last year and beginning of this year in February, they hosted an advanced national strategy program for implementing digital protocol. Now, with this, they got support from ODI and UK's CETA program, which the UK CETA program actually supports different African countries looking to improve their investment in trade advancing their investment in trade protocols and national regulations that speak to this. Lastly, last year, 2025, in October, in Nairobi, we had different countries submit their practical implementation experiences at the 10 committee meeting. So these countries included Tunisia, Zambia, Senegal, Uganda, Togo, and Angola. We are still waiting for the 22nd member to deposit its instrument of ratification, so it could be fully operational. But still, the countries already trading under GTI do have and have submitted their instrument for ratification are already do have an upper hand with the operationalization of the protocol, but it will enter into force 30 days after the second member state deposits its instrument of ratification. Now, here's a 720 billion opportunity. It's been trending for, I think, like an year now, because the key groups that have been in charge of operationalizing the different annexes of the protocol on digital trade spoke about different projections when it comes to what will happen when the protocol on digital trade becomes fully operational. Now, 720 billion by 2050, which is attributed to Africa's young tech-savvy population, rapid mobile penetration, booming fintech and e-commerce sectors, and rising African-owned tech firms. Projections show digitalization could increase Africa's service exports by 74 billion by 2040. We do have the ADAPT project, which is actually run by the AfCFTA. Now, what is the ADAPT project? It was launched in 2025, that's last year. But the Secretariat, in partnership with the World Economic Forum, the Tony Blair Institute, and IOTA, to strengthen digital trade readiness across countries through this ADAPT project. So it's making sure that countries are actually ready from a practice perspective, and ensuring that they're aligned when it comes to their data protection, privacy regulations internally, and what they essentially need to scale to different countries on the continent. Now, before we get to, I'd like first of all to speak about the PAP system, because it's very aligned to this before we get to the protocol on intellectual property. And so what's the PAP system? We saw one of the key challenges that the digital trade protocol is facing before it becomes fully operational is understanding, can we actually make sure that the cost of trading beyond borders is reduced, and cost of compliance? Can we now have faster settlement times of the money that is being paid from one trader to another, whether in services or in goods? And if you've given a service cross-border, you do understand this. If you're providing the same service in your country, it takes about a day to receive your payment. But if you're working with an institution or consulting for an institution that's not within your country, then that's probably is going to catch you more depending on your FX rate of the day, because we've seen this where a company pays you same amount for each month for a consultation, but each month it gets to your account, it's a different amount because of forex trade issues, where we have the dollar trading at different rates each and every day. So having this system has then now brought down that question of how do we then regulate this and ensure that there's sort of like a key system that ensures transaction costs are low, settlement times are actually good, and keeps the value within Africa. So that's essentially the PAP system for us. It's a Pan-African payments and settlement system, and it was actually formulated by the Afreximbank, the African Export and Import Bank, which is based in Egypt. It's a centralized financial market infrastructure enabling instant cross-border payments in African currencies. PAPS reduces reliance on hard currencies like dollar, euro, as we've talked about. When you're consulting for different companies across the continent, sometimes there's a lot of volatility on, what is the dollar rate today, what's the euro rate today. You may get payments that once they land in your account are higher or lower depending on whatever the dollar is trading at in your country, which essentially reduces transaction costs, speed up settlement times, and keeps value within Africa. So it essentially removes the stress from you as a trader, whether in digital trade or in digital trading goods or in digital trading services, of how will the rates look like today, and shifts that stress to now banks. So under the PAP system, we have now different banks that are already working with a PAP system, now have that strength to say, once you pay somebody in Ghana or somebody in Rwanda, they receive that in their local currency with definitely reduced settlement times. Then they have the stress now on the back end to say, how do we then ship this from whatever currencies they trade in on the back end? Because different banks use different, payment settlement systems. Now, the goal is to ensure seamless cross-border transfers, data flows, and logistics moves are actually happening in reality. So the key implementation steps for businesses seeking market access under the AfCFTA, as we stand now, understanding the protocol on digital trade so far, is prepare for new laws on data localization, e-payments, and cross-border data flows. Before we get into the other key implementation steps, I'd like to speak on what the IP protocol looks like, and then we could speak about one of a digital marketplace that has been established by an African, and seek to understand what are they doing with the digital marketplace so far, what are the challenges they've seen so far, and how is it enabling, more cross-border trade and inclusion through that particular system. So the Protocol on Intellectual Property, what's its current status? So it was formally adopted by the AU Assembly in 2023, which was part of the Phase 2 instruments, because there were two phases of adoption. Phase 1 was trading goods and services. Phase 2 was now digital trade, e-commerce, IP, investment, and the competition protocol. Now, we've already talked about, the adoption of the digital trade and how far it's come right now. Now we'll get into the protocol on IP and how far it's come. So essentially, just as I spoke on the protocol on digital trade, the protocol on IP will enter into force upon ratification by 22 state parties, and the process is currently ongoing. Now, as we understand, IP is territorial. You cannot go and sue a company that is using your patent, or let me not call it patent. They're using your idea or replicating an idea that you have within your company in a different country if you've not protected your idea within that other country. And your idea could be a software that you've established within your country, and you see, this software could actually help, people access insurance within the country. Or it could be something as simple as a drawing, right? Because we have designers that we've seen right now. We have more, trade in textiles, and that's why it was very important to look at that. And how then do you protect that cross-border? Now, in October 2025, last year, alongside the adoption of the annexes on digital trade, the 8 annexes on IP protocol were approved by the AfCFTA Council of Ministers. These annexes, they flesh out obligations on specific IP categories. However, the annex establishing the AfCFTA IP office awaits final approval by the Assembly of Heads of State. Now, different countries have an IP office. In Kenya, for example, we have KIPI, which looks at if you want to register an intellectual property, maybe a patent, copyright, or even a trademark. What you do is you do a search within the country's IP office. Then once you do the search and make sure that it's not been registered before, or it was registered but then the period of protection expired, then you do apply for the registration, which takes a bit of time once you get your documents together. But around within 3 weeks, it's already approved, and you can proceed with the implementation of whatever IP you wanted to protect within the country. Now, once you protect it within Kenya, it does not mean that it can't be used in a neighboring country like Tanzania. What happens for that as well now, as it stands, is you apply under ARIPO, which is the African Intellectual Property Office as of now, right? And that's why we're saying the IP office under the is already an existing body that does that, where you can search an existing IP within Africa and choose what countries you want to protect your IP within different African countries. So what are the key obligations under the IP protocol? We have national treatment. This means that businesses will be treated fairly across all member states. Then we have border measures. It provides for stronger enforcement against counterfeited goods at borders. So, for example, if let me use an example of key designers we know right now, Vicky James. If it's a Vicky James dress, if she's protected her design already, and another person wants to come, for example, Timu. Sorry to use that example. Timu comes and produces 100 replicas of the Vicky James design and sells it for 10 times less, right? So Vicky James is now able to sue them and say, listen, my design is already protected in Africa, right? So your counterfeited good now can be sort of restricted from the border point. Then we have traditional knowledge, special protection for African heritage, cultural expression, and benefit sharing. Now, in Africa, what's essentially traditional knowledge? In Africa, for the longest time, before we relied on modern medicine or modern things like, modern designs and even modern menus, right? We relied a lot on our understanding of what a medical solution to a certain disease or ailment look like to us. That's part of, African heritage. Then we have cultural expressions and benefit sharing. That is all covered under the IP protocol. But as we said, it only becomes effective or enter into force once the 22nd state party ratifies it. Then we have the Continental IP Office. I've already spoken to this. As of now, it's still, awaiting approval because there's already an existing IP office within Africa. But now this IP office will have all 50 member states that have already ratified the umbrella agreement, having the implementation ongoing, because for a RIPO, very few countries are part of it as we speak. And it's set to coordinate registrations and operations in it. Okay, so the rules of origin breakthrough enabling trade. When I was speaking about the challenge that was there with defining the rules of origin under the protocol on digital trade because of risk of companies wanting to bypass beneficial ownership tests by saying, I'm going to sign an agreement with you and I'm going to have an NDA with you to look like the front of the company. And we have a lot of companies fronting, especially in countries that have local content regulations that say for you to set up in this country, you need to have certain percentage of managerial positions by nationals, right? We have countries that, or rather companies that are trying to outsmart the system or bypass the beneficial ownership test by sending NDAs and saying, you will be the front of this company, but behind the scene, so-and-so person is actually the owner of this company. So that's a key challenge that we've seen. So what do clear rules of origin mean? It means the businesses know what qualifies for preferential treatment, and digital platforms can offer clear guidance to sellers, so customs can process goods faster. After 4 years of negotiations, the Ministerial Council in Egypt, that was last year, successfully achieved consensus on outstanding rules of origin for apparel and textiles and automotive sectors. As you've seen, these are two key sectors, but the rest of the sectors still need a lot of understanding and saying, okay, let's sit down and renegotiate and see how could we proceed with this. At the end of the day, digital trade is not about services only. It's movement of goods. It's movement of whatever services that you need to provide across the board. We have talked about the PAP system, and I will speak about what else needs to be done to ensure that businesses are actually identifying key markets that they could access and actually getting into it. So run IP clearance searches across priority markets. Once the AfCFTA IP market IP office is set, it's going to be on the go, right? And you don't want to get there and already find, oh, somebody has already replicated my design and registered it in my country. So before then, use this time to check if I'm running a software and it's been registered, its IP is registered in Kenya and owned by my company. Is there any other person purporting to own the same thing in a different African country? So that when the IP office actually becomes operational, it's easier to do the search under the system, knowing that you're covered already in the key countries that you'd like to operate in or access, and register it. Then digital documentation and single window systems are becoming mandatory, so ensure your systems are ready. The single market, not 54 separate ones. So start it at the beginning. Implementation, as we spoke about in the last session that Meili took us through. When it comes to things like operationalization of ESG standards, start it from the beginning and say, if I'm an African business, what should I do to ensure that I'm competitive within the systems? And that brings us to the end of today's session. I wanted to make sure that we keep it to 3:30, so we can give about 15 to 20 minutes to Eki Global Holdings, which is a digital platform. It's actually a digital infrastructure that offers, a platform for people to trade beyond its borders and, list whatever goods or services, both B2B and B2C, and how they're doing it, and, if they've encountered any challenges, and, tell us more about their digital platform and what they're doing to ensure inclusivity. And then we'll have the last 5 to 10 minutes for questions, then we can wrap up this session. So I'll give this opportunity to Godwin.
Brenda.
Hi, Godwin. Let me stop sharing so people can. Do you have anything you'd like to present?
Yes, good afternoon, everyone.
Good afternoon.
Wait, so we'll be making a brief presentation and introduction on what taking Global Holding have for Africa, SMEs, and big organizations. Under our portfolio, we have the Ekiplace. Ekiplace is a digital marketplace where people providing product and services can easily create their storefronts and sell products. Aside from that, we also have very interesting features on it where businesses in Africa can actually drop ship from manufacturers from different countries into their storefronts and be able to sell seamlessly. So in the digital world, I believe many of you are used to Alibaba, Amazon, Shopify, and other digital platforms. But however, this is built in the reversed order. Instead of them selling to Africa, we enable Africa to sell to the world. The presentation, I would have loved to do presentation, but I just want to do a brief introduction. I believe Brenda did not see my message. I shared it on the DM before this meeting. But on that note, I just want to quickly just do a brief introduction of that. Maybe some other time I can get our team to do a presentation. But for some of you, for the purpose of exploring what Ekiplace have to offer, you can visit eki.digital, www.eki.digital, which I drop on the live charts. So under that, or you download the app, you download the application on App Store and Play Store as well. So with that, it makes it very easy for you to create your store. We have two types of features. We have a free features. Then we also have a paid features. Free features enable you to upload different products and all of that, but it has a limitation. And the limitation is just that you will not be verified and all of that. Then when you are using the paid feature, which is $10 per month, that enables you to get it verified and also get more buyers trust. And also through the paid feature, you also have access to the drop shipping, and you will be able to coordinate and drop ship products from manufacturing company from US, from China, Japan, South Korea, and different other manufacturer. This is just enabling intercontinental trade and make it trade seamless in the digital world, because under the new trade agreement, we believe we as an innovator, we are meant to provide a real solution of whatsoever contract or policies that have been implemented by these intergovernmental bodies. And that is what AKI Global Holding is doing. And with this, it makes it seamless for somebody in Kenya to easily be able to sell to somebody in Ghana seamlessly, and there's no friction on conversion, payment, or payment hindrances and all of that. Yeah, somebody said, oh, we don't actually have payment hindrances, but you do, but you don't know, because sometimes the rates are crazy. And I'm loving what is currently happening with Kenya, Rwanda, and Ghana with the new integration payment seamlessly that is being signed by these two governments. So what this means to us is that, for example, Rwanda is the heart of Africa. Kenya is being positioned as the Silicon of Africa. And we all know that Ghana economy now is growing so big and so very strong. And they have the strongest currency in the whole of Africa. So AKI Place, being a technology that is domiciled in Rwanda, which is the center of Africa, give it a lot of boost for entrepreneurs and startups to be able to leverage on our platform to connect and to make sales and services seamlessly. On the 12th to 18th of October, this platform, there's going to be a signed contract with over 20 presidents in Rwanda for the Global Trade Fair event, Africa Unbossed. And by that, we're going to be having more endorsements across the European countries and the Asia countries and America countries, where we all intend to be shipping and to be empowering our entrepreneurs who will be using the AKI Place platform for seamless continuation of their product and services. So this is just a brief of introduction. I think in the next webinar, when we are be giving a good notice, our team are going to be making presentation and take you guys through the stage by stage, and thereby answer every question that is required. But in the chat box, I've already put the link there, and also on your App Store and Play Store, you can just search AKI Marketplace and you get it downloaded. Thank you very much, Brenda, for this opportunity.
Thanks so much. I think that was a good introduction, and the fact that you've given the link, it's easier to get on and see what is happening. So thanks so much. So I think I'll close this off today here by showing you the upcoming events we have. Godwin has already spoken about the Global Trade Fair, which is happening from the 12th to the 18th of October in Kigali, Rwanda. Then we have the Power Connect annual event, which is a closed door B2B meetings and deal rooms. Then lastly, the AfCFTA workshop. It's going to happen at the end of cohort 1 in Johannesburg. So I will stop my presentation here, and thank you so much for joining. For some weird reason, on the presentation, on the meeting link, it showed 64 registrations, but I don't know, I don't want to assume that each of the 64 people got busy today, but we do have a recording that we will share with those who managed to register but did not get an opportunity to attend. We understand it's in the middle of a workday and sometimes it can get a bit busy, but thank you so much for joining. I see Michelle dropped off on the call, as well as Lydia, but I will share the recording right after this.